please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Welcome to Morning Call. I'm Lata Venkatesh and with me are Anuj and Sonia. Well, once again, it's a huge deluge of red, both on Wall Street and followed up in Asia. The tech stocks are the ones that are leading us lower this time. But I think the important point to note in all this mayhem and inability of markets to transcend highs is that bond yields have fallen, which means people have actually migrated from equities to bonds, at least on Wall Street, and that's not a very happy sign for a global market synchronous move that has been betting on synchronous global growth. The sign that people are now moving to safe haven bonds puts a question mark over growth. Some doubts have begun. It's not a big fall in yields. It's only 2.78 from the 2.82, but it's psychologically important that there seems to be some doubt over the equity rally now, which is why people have moved over to bonds. So therefore, that's doubts over growth. Of course, we have had our own share of problems. Yesterday, we had very good tailwinds from global markets and from the bond markets in India, and we still could not quite cross that 10,180, 10,200 mark. So niggling troubles, both globally and in India. And today, of course, F&O will dominate. Morning, both of you.
Hi, good morning. Not only F&O, you have a long weekend coming up. Global markets are volatile. Our own markets are volatile. So I don't know if people would want to leave any, of their positions, long positions open, if they have it at all. Anuj, morning. What's the sense you're getting? Because we have so many queues stacked up, and this market has been finding it a bit tough to get above that 200 DMA successfully for a few days now. You think today could be a bit volatile ahead of the long weekend?
Morning, Sonia. It's tough, honestly. I don't want to take any call this. It's pointless, and you respect what the market does. And today could be so volatile. And don't make any trend out of today. That's the limited point. Today you could be down 100 points. It would be immaterial. You could be up 100 points. It would be immaterial because you're heading into 4-day weekend. A short point here is that our market is underperforming. If you take a look at the indices this month, MSCI Emerging Index is down only 0.2%, while Asia ex Japan is up about 0.5%. And of course, this is dollar terms. And Sensex is down 3%, and midcap is down 3.6%. If you're looking at pure MSCI India, that's down even more. The point here is that there's some congestion at the 200-day moving average. Where's the 200-day moving average? It's at around 10,180, thereabout. And we spoke about it yesterday as well, Sonia, in the morning, that 10,180 to 10,200 is going to be some congestion zone for the market. It's going to take some doing. Now, the question you ask yourself is, what do you do ahead of a 4-day long weekend? Yesterday and day before, the weak bears have been taken to cleaners. There's this adage that the scared bear is the biggest bull. That's played out over the last couple of days. The weak shorts are out of the system. Strong shorts are still there. In fact, they're adding. If you take a look at the FI data yesterday, there was quite a bit of call writing. The market went up 55 points, and the 10,200 call premium was actually down 25%. What is that telling you? That at higher level, there's propensity to actually sell calls. And, short point here is this market will need to test its bottom once again below the 10,000 mark. The corrections don't end like this, that you just one fine day go to 99.80 and then bounce back and then things start to improve. You normally make a bit of a double bottom, which is that the market tries to make a bottom, then has a rally, and then that bottom is tested again. That process happens. Perhaps that happens in April or that happens in May ahead of Karnataka elections, but it happens. For today, I think you'll have to just buy your time till 3 p.m. because after a gap down, I don't know if there's a short trade, and with the global queue so volatile, I don't know if there's a long trade. So just buy your time till 3 p.m. and then see if there's a possibility. There's a good possibility of a vertical move at around 3 p.m. Perhaps you may want to play for that, or you may want to play individual stocks, which we'll discuss. But on the index, I don't think right now, at the open, there's any trade that I don't think is there.
This vertical last 30-minute move is because shorts may not want to carry over the weekend?
I don't know. I mean,
why would you guess that there could be a vertical?
So, see, the problem sitting here right now is that we don't know at 3 p.m. what kind of move could happen. There could be a vertical move for sure, 50, 60 points in either direction. Sitting here right now,
it could be a cliff or it could be a climb.
Exactly, it could be both sides. So, as I said, I would want to see how the market reacts, how the market moves through the day. Just one point, actually, I forgot to make that. Yesterday's low was 10,139. I think you'll want to monitor that. If you start to trade below that, in that case, there could be, downward movement. If, however, you start to take out yesterday's high and start to trade in the green, expiry day, anything can happen, then of course, let's see. But as I said, for today, I mean, absolutely no point in, preempting any move. You just want to see what the market is doing and then take a call accordingly.
Oh, absolutely. You said the Sensex was down 3% for the month. I mean, a lot of heavyweights have been under pressure this month, ICICI Bank is down almost 10% for the month. SBI, TCS, all have lost about 5 to 7%.
But yesterday, the surprise element after our markets closed is that bond yields actually closed at 7.3 or maybe 7.33. The best experts in the morning were expecting 7.4. We opened at 7.35 and went on to trade at 7.3. So my sense is that would be a small element of bonhomie for the market, that yields have fallen. To that extent, the NBFC, the related sectors will have a spot of cheer.
Okay, well, Anuj was wondering what to do ahead of the long weekend in terms of a trade. I guess you just plan your long weekend and sit tight, right? But let's take a look at what our wise experts have to say as we head into trade this morning. We have Derek Higa of William O'Neill, who says they downgraded 5 APAC markets recently to a downtrend as distribution increased and markets broke respective support levels. He said in recent days, the MSCI has bounced back, rising back above the 50-day moving average on above average volumes. He says volatility both ways has them wondering whether we are now in a whipsaw market environment or just a normal but quick reversion to the mean as part of a strong global bull cycle. Overall, he adds their sentiment is more optimistic from last week's note.
Okay, and some money market views. Pramit Brahmabhatta Veracity says rupees expected to remain in the range of 64.50, 65. The positive bias says support from the domestic equity market and pressure on the US dollar globally may push the USD INR towards 64.50. And on bonds, of course, more important, Dhaval Dalal of Edelweiss says government bond market witnessed an unprecedented relief rally yesterday after the government surprised with a lower than expected borrowing program for first half of FY19. He expects the government bond market to maintain its momentum in the near term ahead of the financial year end and negative bond supply in April 2018. He expects 10-year benchmark bond yield to trend towards 7.25 and consolidate in the 7.2 to 7.4 range in the near term. 7.25 today would bring a lot of cheer to the banks. At least, I mean, they're going to make huge NPA losses, but at least bond provisioning will be out of the window.
Okay. Well, overnight it was interesting. By the time most of us slept, I mean, the US market was doing fine. Dow was up 200 points. We woke up and saw a big decline in the US market overnight. In fact, almost 600-point intraday decline in the Dow. Here's Mangalam with the world view.
That's right. Tech stocks weighed the Dow lower as well as the US markets lower. The Dow was down about 350 points by close after opening well in the green. The Nasdaq, that one was the key underperformer there with a cut of 3 percentage points. So we'll keep an eye out on that. What was the key drag? Facebook. Well, investors as well as users have unfriended this app because if you take a look at the stock has lost about 18% since the data leak controversy. Merrill Lynch has reduced its target price by 20% in just the last 5 days on Facebook. And we talk about the FANG stocks leading the market higher. Well, it's the same FANG stocks, Facebook, Amazon, Netflix, as well as Google parent Alphabet, which lost anywhere between 4, 5 and some even 6% in yesterday's trading session. What also literally hit or crashed into a wall of worry are the self-driving space. Nvidia, the big outperformer there, that stock lost 8% after putting on hold its self-driving car tests. Tesla too down 8% after a self-driving accident. Across the European markets though, we saw a tinge of green, rather a sharp shade of green. That was because day before yesterday, the Wall Street moved higher while the European markets underperformed, so they caught up on that rally. In the European space, GSK, that one was up 5% after they've bought Novartis stake in the joint venture and they put their Indian brand and Horlicks under review for sale. H&M on the other hand was down 5%. Profits in the first quarter were lower. We saw some recovery in the Russian index after 1 month lows, but the Brazilian index was sold in too by 1%. And the Asian screen, that one's telling you that there is a lot of red. The Nikkei is lower because of a stronger yen. And the SGX Nifty, for starters, indicates a cut of close to 30 points.
All right, okay. Mangalam, thanks a lot for that. Yes, the self-driving stocks have been under a lot of pressure. Tesla actually lost $4 billion in market value in just one day because of those accidents with respect to self-driving. But there's a SEBI board meet today, Lata.
Yeah, actually, we should have put that in the queues because the SEBI board meeting press conference, if I'm not mistaken, is at 3 p.m. So it's going to come in market hours. And there are some very important proposals that the SEBI is considering, which has an impact on listed stocks. For instance, they're going to consider whether they should allow trading of stocks that have been declared bankrupt and have taken to the NCLT. Now, one doesn't know what the SEBI will decide, but the very fact that they're going to take it over there is a very important consideration for a lot of stocks which are in the NCLT already. You know, say the Bhushan stocks or some of the JP stocks, even say Lanco, the whole host, the works. As well, they're going to check whether, you know, if you are in NCLT and a promoter, a new promoter has taken charge of you, whether the minimum public shareholding will apply. Because, you know, of debt conversion to equity, it's possible that the Tatas, for instance, get 95% in Bhushan. So the minimum public shareholding, they will not be immediately asked to bring down their shareholding. It's possible. It's possible. We don't know. These rules are going to be considered. And therefore, this becomes very important, especially because I think the press conference time is 3 p.m.
Yes,
which means it's during market hours that we may get the announcements.
11 a.m. is when the meeting starts and 4 p.m. is the press conference. So we'll get more on that. But let's talk about the big deal, right? TPG-backed Manipal Hospitals has decided to buy Fortis Healthcare and invest a sum of 3,900 crores. Let's get in Prakash Diwan, who joins in now to give us more details on what he's expecting from the deal as well as the stock. Prakash, hi, morning. Fortis is now part of a much larger entity, and we all know, you know, Manipal has got great track record, much better margins, etc. From here on, how do you see the Fortis share move?
So I think so. A couple of things, Sonia, that we need to put in perspective. One is that the 3,900 crores that the promoters are putting is going to help them buy. One is the 50% plus stake in the diagnostic business, and of course this particular hospital business from Fortis. And the 10.83 swap that seems to be out is definitely a win-win of sorts, both for the Fortis shareholders and for the TPG-backed business, because this kind of values the overall business for at about 9,600 crores, you know, in the first math that we could do. Of course, the con call is just started, so we'll have to wait for more details to come through from the Fortis management. But I think it's a much better deal than what we were expecting or we were hearing about. So when Nisha broke this news about first the slum sale and then the asset sale, there was a possibility that we could have seen, you know, the Fortis assets being diluted and just sold out and nothing much left for the minority shareholders. Whereas here, at least the Fortis shareholders do go home with much more value than what was anticipated earlier. So I think it's definitely going to be taken up well.
Okay, but good morning, Prakash. Can you do any valuation at all? Looks very tough because we don't know so much about Manipal hospitals. It's in the private domain. So,
no, so that's
at
exactly
what point, how much value can you attribute to the Fortis share now? Although it's only a holding company.
Absolutely, I agree. But what's going to happen is you end up getting about 10.83 shares of the Manipal Hospital Group. Now, TPG, when they have invested, of course, it's more of a whisper number and stuff in terms of what valuation they had accorded to, you know, that investment when they had made it. And they made it much earlier. It's been in the past and in different branches. So that's what I'd used as a reference. And that values the business of Fortis, which is now being taken over and merged with the Manipal Group. Even if I were to take the same parity of, you know, the valuation for hospital beds that Fortis has, the combined entity would be valued at close to 9,600 crores. That's what I mentioned. Because Fortis is at about 7,800 crores market cap as on last close. And this incremental value would come from the Manipal Group of assets. So it seems like accretive for the Fortis shareholders, though this would be residually left as a holding company. But today the swap would be much more favorable for the shareholders if you were to buy the Fortis shares.
Okay, so even today buying Fortis is going to be positive for the shareholders.
Yes. That's what I'm saying. It's going to be a positive re-rating, and there is still some benefit, some value left for the Fortis shareholders once the merger comes through.
What about operationally? Do you think efficiencies could improve? Because Manipal's margins, as we know, how much ever we know, are much better than Fortis, almost 16% margins. Fortis, I think, is sitting at about 6-8% or so. Do you think operational efficiencies could improve a lot for the merged entity?
So, yes, Sonia, the scale of the business will definitely accord efficiencies. But remember, Manipal was a much more smaller, focused, very tight ship that was being run, whereas Fortis had expanded inorganically and acquired assets of all views, so right from the Fortis, the Wokhart, assets to the assets overseas. So their efficiencies were always a question mark because they'd expanded too fast. The integration levels were not as great as what Manipal has demonstrated. So I think if Manipal were to run their business, run this new entity, the way they've run Manipal, and we've seen the way, Manipal, Bangalore and all of those have scaled up. Yes, there could be an improvement in that for sure, but I can't put a value to that at this point in time. I'm just talking about the math that works, the arithmetic that works out as it is on an as-it-is basis right now.
Okay. Prakash, we'll leave it at that. I guess we will wait for more numbers, and there is a press conference, so perhaps we'll be able to better get an idea of how to value the Fortis stock post that. Thank you very much for joining us and giving us an idea of how to understand this deal. You just saw the flashes going by that SBI has increased interest rates on some bulk deposits and also on some retail deposits. Now, that's a bit shocking. One would have thought that the softening of yields would actually stop these kinds of increases in deposits. If SBI is, in spite of it, increasing deposits, then clearly we are not seeing too much by way of cheaper cost of money. This is only a bond market correction that has happened. It doesn't mean borrowing rates are going down for corporates. Any transmission of lower rates for borrowers is not happening. Okay. Clearly, the cycle has turned in favor of more expensive money. That may be a bit of a jar, but that also indicates that there is demand for loans.
Yes.
Otherwise, you wouldn't see them increasing deposit rates.
This morning, the US markets are under pressure. Asian markets are also under pressure, by the way. The Japanese market has fallen almost 400 points. And the indication from the SGX Nifty is that we could be headed for quite a volatile start as well. Hang Seng too is down 350 points. Let's see how we open up. After 2 good days, perhaps you could see some volatility today. Our research team is here to give you the list of top 10 stocks to watch for the day and to give you an indication of the trends. Anuj, what are you looking at today?
Yeah, Sonia, but before that, today could be very volatile day. Yes. So, by just 2 bits, it could cut both ways today. Just, don't take aggressive calls for the day today. Let this whole long weekend go. Take fresh guard, I think, next Monday morning. That perhaps would be a better strategy. But of course, for those who have to, they will still. But in terms of stocks, the expiry stocks, the 6 stocks that I always watch out for the 3 p.m. move. Again, you don't know where they would. It will depend on the VWAP factor. So HDFC Twins, Reliance, ITC, Infosys, and Larsen & Toubro. Keep these stocks on your radar. HDFC is normally the one that really makes the biggest move. So that's something I'll be watching out for. But there are others as well, of course, which will have impact. 3 p.m. move could happen today.
Okay, well, that's the expiry play that Anuj is looking at, but the Fortis deal, right? Ekta joins in now. Ekta, how many days and nights have you waited for this deal to fructify? And finally, it's come through. Of course, you gave us all the details well in advance, but tell us about the contours of the deal.
Well, in terms of the contours of the deal, I think it's widely known that now they're going to demerge the hospital business, and eventually Manipal is going to be relisted with the hospital business of Fortis. Fortis will remain as a holding company primarily for SRL Diagnostics, where Manipal will be acquiring majority stake there as well, over 50-odd%. Now, the important thing to note is that what exactly will the new entity look like? If you're looking at that, what stands out to me is that they will have better margins on a combined basis as compared to what Fortis has right now. Fortis margins as of 9 months was around 6-odd%. The combined entity is going to have margins of around 14-odd%, and this combined entity is going to propel itself to as big as a hospital chain as Apollo Hospitals. So you're probably going to have another listed entity which is as big as Apollo Hospitals in the market, with margins which would be equal or a little above what currently is available in the hospital business. So that's what stands out. Just want to add, Fortis Malar will be in focus because there will be an open offer for Fortis Malar as well.
Okay, thanks a lot for that, Ekta. Yes, that would be, of course, our stock to watch, at least for starters. Rima, what about Persistent Systems?
Well, negative news coming in for Persistent Systems, Anuj. The company's indicated that in the Jan to March quarter, that's Q4, their IP business, which is intellectual properties, which currently contributes a little more than a quarter of the overall revenues, will see a revenue decline of $8 million on a quarter-on-quarter basis. Now, $8 million is significant because it's close to about 6.5% of the company's quarterly run rate as per the last quarter. And this is a non-linear business, which means the decline in revenues flows through directly to the company's earnings. Now, Q4 is typically weak for the IP business, but Credit Suisse says that this time it seems to be weaker than what was anticipated. Though on the flip side, this seems to be a Q4 problem because for FY19, the management sounds optimistic. They say they will beat the NASSCOM guidance for the full year. Morgan Stanley says that yes, it's come as a negative surprise and perhaps even for the management, which is why they had to come out and give this quarterly update. The EPS impact, according to them, for FY18 will be close to about 6%, but you cannot rule out a potential PED rating. So definitely negative for Persistent today.
Okay. Thanks a lot for that. Not sounding good. As it is, IT stocks are going to have a headwind facing them from NASDAQ. All right, let's move over to Mangalam. Talwalkar's on your radar.
That's right, Lata. So I expect a deep red on Talwalkar's in today's trading session. Why? Because yesterday, remember, there was a lot of confusion on the street. The stock went ex its healthcare business, which is its gym business, but the street was factoring in that it is the lifestyle business which accounts for 20% of its revenue, which has gone out. But currently what is trading, it's the lifestyle business, which is 20% of the company's overall revenue. Yesterday, the price reflected the gym business, so we can expect the stock to go lower to reflect the true value of the lifestyle business, which accounts for just 20% of the company's total revenue. So see some red and adjustment on Talwalkar's today.
Okay, so there's going to be quite a bit of adjustment on the stock today. Just keep an eye out on that.
Yeah, oh my God, that's a bit of a nasty jar.
Yeah, it was quite, it was being discussed at length as well yesterday as well. The way that stock was falling. I think Nigel was also explaining on Twitter. But Sonia, what about Tata Motors?
Well, Tata Motors will be in focus because Jaguar Land Rover, what they've done is they've partnered with the Google's self-driving arm called Waymo. Now, all right, before that, let's just, come back to the deal with Fortis. Yeah, let's listen in to what the management has to say.
Journey of healthcare excellence. It might interest you to know that if I look at all the various people that have spent time in Fortis in terms of looking, diligence, work taking place, kicking the tires to understand what's happening, we've spent a combined time of almost 2 years, meaning literally a good chunk of the subset of our leadership team, our finance team, our investor relations team, our entire leadership team focusing on and working with various investors. So I think the first point that I want to get across is that we have spent a disproportionate amount of time working on sitting in meetings, discussing, visiting hospitals, talking about data with potential investors. And it's had a significant strain with respect to what I do, what our leadership team does, and how we spend our time. So instead of doing what we should be doing, we've been spending a lot of time focusing on things like this. So that's been a significant activity for us. Now, if you look at compounding that, think about what's been happening in the healthcare industry and the turbulent times that the industry has been going through. I've said very, very often that our industry is one of the most maligned industries in the country today, and good, bad, or otherwise, Fortis is part of that group that very often becomes a topic of discussion when you start looking at the private healthcare story, the public healthcare story, and the value proposition around healthcare has become quite a heated topic. And Fortis is right smack in the middle of this whole thing. If you remember, if you think back a few months back between what happened in one of our hospitals, what happened in one of the other hospitals, this whole notion of, how much do you charge, what is the value proposition, transparency, etc. So that's also taken a good bit of time and a good bit of resources as we've all managed through that, and certainly that's been a challenge as well. And then more recently, this is very specific to Fortis. You start looking at what's been happening at Fortis inside the four walls of Fortis. Between what's been happening in our group, between some of the challenges that have been taking place at promoter level, we've had a massive distraction inside our organization, and that's created quite a bit of challenges. So when you put all of that together, you have an industry that's going through multiple changes. I think the whole notion of where private healthcare is going is up for discussion right now. And there's a vacuum. There's a vacuum for leadership there in terms of organizations and what we're doing and how we step up. I think that within Fortis itself, A, starting with the investor discussions we've been having, B, the industry challenges that have been taking place, and C, our own challenges with respect to group and promoter, we've had some significant taking place. And that's, quite honestly, to be very, very candid and very frank, it's been a very challenging journey for Fortis over the last few months. We continue to be extremely, extremely committed to focusing on and driving the best possible patient care, working with our extremely, extremely loyal, dedicated, and some of the best doctors in the world, some of the best nurses in the world. We continue to be committed to that. But the reality has been that it's been hard to do that. It's been hard to do that because we spent so much time spending on other things versus what we should be doing. And that's why today is an absolutely, it's a red letter day for Fortis Healthcare. We are absolutely thrilled with this transaction. I know there are a lot of questions about the transaction, and we're happy to entertain the questions. We're happy to discuss to whatever extent anybody's interested in doing. But I can tell you that when you look at any merger, when you look at the coming together of any organization, I think there's two ways to look at it. I think number one is you can take a limited view or even a short-sighted view in terms of what does this mean. You start to say to yourself, well, I have 4 hospitals here, and how do I merge, and how do I share doctors, and how do I do this? Well, that's one way to look at it. Similarly, on a similar wavelength, you can start to say, well, here's potentially what I might be able to do from a supply chain perspective, and certainly there's merit to that because we believe there's a tremendous amount of synergies that come out of this transaction, the coming together of the organization. But really, if you step back and think about what does a good, if I had to think about Fortis Healthcare demerging its hospitals into Manipal, if you step back, if we all sat back and thought for a minute, what exactly would good look like in 3 years? If we sat back and said, was this a good transaction or not? Here's the 2 or 3 things that I think would matter when you start thinking about this. Number one would be a leadership position in the industry. Now let's think about that for a second. Look at what's happening in the industry today. The whole notion of value around healthcare is being questioned. We have a lot of very, very capable, very qualified players in the marketplace, a lot of people who are doing a lot of good things. But the reality is that this gives us the Fortis Manipal physical blueprint that we have today, gives us a national presence that does not exist in India. It does not exist, ladies and gentlemen, it does not exist, period. This is the first national healthcare player that is going to be able to provide outstanding clinical patient experience.
Ekta, this is the conference operator. Hello? Ekta Batra, this is the conference operator.
Well, I think this was intended for analysts, and so maybe the company is creating a problem that we have put it on air. But in any case, I think the thrust of the conversation was that Fortis sees this as a synergy and making the combine of Fortis and Manipal hospitals the #1 group in hospital care in the country. So they're talking about synergies. We will, of course, listen in and keep you posted as to what the other details are. Hopefully, financial details are going to be shared shortly by the Fortis management.
Oh, absolutely. So that stock is definitely going to move up today because of this deal that has finally come through. But there are other pharma stocks in focus as well. Indoco Remedies is one that we're going to watch out for. The UK MHRA has issued some observations. There are 3 critical observations and 4 major observations for the company. The company has said to the exchanges that they will resolve the issue and they will respond to the UK MHRA very soon. But this stock could be under pressure because of these observations. GSK Consumers, of course, we've debated that at length yesterday, but Mangalam joins in to tell us more about that. Mangalam?
Absolutely, Sonia. For us consumers, the bigger story is Horlicks is on the block. Remember, GSK, the international parent, they said they're looking at Horlicks as well as their stake in the Indian arm GSK Consumer, which is about 72.5%, and that is under consideration to fund the deal that they've had with Novartis, where they'll buy their stake for about $13 billion. So we'll keep an eye out on that. The review will take about a year. Any announcement is likely to come by end 2018 itself. And to my mind, there could be 3 players who will look at Horlicks. Mondelez, which owns Bonvita. The second one could be Danone, which owns Proteinex. And the third one in the fray perhaps could also be Nestle. We'll keep an eye out on that. Any announcement will come only by the end of this year. That too, not sure. But the key point is the stock has a floor price to it right now. So we'll keep an eye out on this one.
Okay, Mangalam, Horlicks, right? We've all fond memories of that from our childhood.
Absolutely.
Yes.
I was a Horlicks fan.
Okay, but some news flashing on PNB, Lata, just tell us what
Yeah, we've just got it from the bankers. You know, today was a do or die day because it's the last working day. Then the banks, it's a bank holiday on 29th and 30th and of course 31st. So if PNB didn't pay today, it becomes an NPA. I mean, a sovereign bank, a sovereign guaranteed bank becoming an NPA. So this naughty issue had to be resolved. But apparently, day before yesterday itself, PNB had agreed to all its debtor bankers that it will pay back the money that is owed to them. And all it has asked is a note in exchange that if some mistake, error or fraud is found on the part of the employees of those banks, that money will be returned. But I guess that's only a formality that they have asked. But the important point is how PNB will provision it. Over there, details are still awaited. They are in talks with RBI. If it is an operational fraud, rules require that the entire thing has to be provided. But if it's an advances fraud, where, you know, the borrower is guilty of fraud, then apparently time can be given. Then it's treated as an NPA. So they could be given, you know, they have to provide 15%. Some time can be given. It could be treated as an NPA and therefore be given more time. That possibility exists. So that's the most important thing. A big relief for the banking sector that PNB, that the issue is resolved. Okay. So some bit of a green on the stocks for that.
Okay, and finally, we have Sonal joining in. She'll give us some stocks that are in the news this morning. Sonal, what do you have?
Well, I'll start with Aegis Networks. The stock will be in focus for two reasons. One, because it has won an order from BSNL worth 336 crores. But the company has also reduced the revenue growth guidance versus 5% growth in the last year. Remember, even in Q3, the company had reduced the guidance from 20% growth to 5%. And now it says that there'll be some degrowth. So expect that stock to see some red today. Avanti Feed has started commercial production with additional capacity of 1,75,000 million tons. And now the total capacity for the shrimp feed plant comes up to 6 lakh tons per annum, and the capacity utilization, the company says, will be around 60 to 65%. Bhansali Engineering will also be in focus because the company says they have paid all the dues amounting to around 216 crores, so that stock will be in focus. Bodil Chemicals has completed the expansion of dyestuff plant by 12,000 million tons per annum, and the total capacity comes to 29,000 million tons right now, and expect that stock to be in green as well.
Okay, well, there's some news on Biocon. Mylan and the company have got a nod from the EU Commission, TGA Australia for insulin glargine. All right, that's of course a positive.
Sounds important because glargine is a key product, and if they've got nods from both the EU Commission as well as Australia, then certainly that looks like a positive for Biocon.
Yes, and the stock has been on a tear, right? Last few days, the stock has gained almost about 6% or so. Some more positive news flow coming in. But let's do a quick recap of our top stocks to watch. There are plenty to talk about today. In our list of green stocks flashing for you on the screen, Fortis Healthcare, Tata Motors, GSK Pharma, Bhansali Engineering, Bodal Chemicals, PNB and the entire set of PSU banks. While stocks expected to be under pressure today, you have Persistent Systems, Indoco Remedies, Talwalkars, Aegis Networks and Avanti Feeds. We'll discuss all this and more on the other side of the break. Also, last day before a big long weekend and F&O expiry. Ashwini Gujral, Sudarshan Sukhani and Mitesh Thakkar will be our guests.